Hello traders, Gary Wagner here. Just about 11 o'clock in Honolulu, 5 o'clock in New York on Thursday, the second day of October, 2014, and this is the daily report for gold and silver. We do have a mixed bag in the precious metals markets this morning, with gold trading slightly higher to unchanged, and silver, platinum, and palladium all trading lower. First to gold, current print is 1214.60.66, call it 1214 and change. According to Kitco, the high 1221.20. According to eSignal, high 1224. That's important, of course, because we did have a price order in that was filled last night to sell the market at 1221. We'll talk about that in a second. First, a note. My primary computer did have a power supply problem this morning. That is why I have redundant systems or backups on everything. However, this particular system does not contain a lot of my chart work that I do have backed up, and I'll move it over to the system after the show. But that's why we have redundant systems. So I do apologize for the charts today. Silver. Currently trading off roughly 6 cents, still above $17, $17.11. Now, in terms of the range on silver, it has had a low of $16.89 and a high of $17.31. More on silver in a little bit. Traders, as I said at the beginning of the show, I do want to apologize for my lack of chart work today. We are using one of my redundant systems, as one of my primary systems did present some issues this morning. Nonetheless, let's get right to it. We did put out a price order to sell the market short. Of course, I'm going and pulling up. This, of course, is our COMEX gold. We also have cash gold. And when we do that in terms of our daily chart, currently trading 1214.60, if we look at the highs that we saw in here, you can see that the high on this particular candle here was 1224, this being the daily chart here. Also on our cash market daily chart, we can go ahead and pull that up. We have a similar print, although on this I believe it is about 22 there, 1222.41. So all traders that put in price orders to sell at 1221 should have in fact been filled. And what I did was, initially we were going to put our stop, a protective stop, really above this particular area right in here. Let me go and get one of my pointers or something, but I really wanted to protect us above this particular point here, because here we had this small clip up, then the market runs lower. And lately what we've really been seeing is the market really consolidating, trading in a tight range. We're getting alternating candle color. Alternating candle color always defines the lack of a trend. But nonetheless, what I did this morning is I did send out a special trade alert recommending the traders move their stop tight to just above 1225. The reason for that is as follows. You can see over the last couple of days, it's been flirting and fighting with the 1220, 1221 area. That's why we put the price order in right there, is because I believe that if we did have the good fortune to actually go ahead and get filled on this position, we would be putting ourselves in a fairly decent location in terms of entry price point, because that seemed to be, relatively speaking, the highs that we've seen recently. Now, we do have the equities markets, which were under pressure. Those ended up closing unchanged to up a little bit. Dollar has been wavering over the last couple of days, but I believe now is showing some regained signs of strength. And so therefore, my sense is the bigger bounce that I was looking for, simply put, did not happen. Now, we talked about on yesterday's show what it would really take for me to be bullish in this market. And really, what I would have to see more than anything else is us to take out this particular area here. This is just at around 1240. And of course, it's based upon this last decline before we had a $100 rally, taking us from about 1240 up to about 1340. From there, we've had a slow demise as the market came down. And as we talked about, as it broke through various levels, especially 61 on a fib retracement, and then 31 also is an important number. But as it broke through those points, my sense was that it would probably come in and test 1200. Now, no cigar there, because the intraday low that we've gotten up till this point has been roughly at 1204. So just shy of that mark, the $1,200 mark. My sense is there is still the ability or the opportunity for the market to go to that particular area, and I still believe that we could continue to see the precious metals under pressure, especially if we see a resurgence in the equities markets. The dollar is really the only game in town. We've got the European Union doing a round of quantitative easing, and we are not. That's going to put strength to the dollar. Obviously, my current strategy and suggestion is to maintain our current positions at 1221, maintain our current stops, which are just above 1225. So traders, what about silver? Well, of course, the other day we had that tremendous spike, but that tremendous spike, that's right here. It's a piercing line. On this piercing line pattern, we don't get any kind of confirmation, today's candle being an inside trading day and a red candle, but this particular rise came after a dramatic, almost a $0.50 fall from grace, in which we saw silver actually trade below $17. We haven't seen that in a while. We have identified various support levels, but my sense right now is it is having a disconnect between the stronger equities markets that we saw over the last few weeks, dramatically lower pricing in both silver as well as platinum. Precious metals that have industrial components are trading under pressure. I don't know if it's a supply-demand issue, but what I will tell you is on a technical basis, I wouldn't be surprised to see silver drift lower, especially if we see gold go back and test 1200. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up. Bye-bye.